Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, October 1st, first day of Q4. So, as always, run your video player at 1.25x for maximum viewing pleasure. Let's go through futures real quick. They are rallying at the moment. We were down quite a bit when I got up this morning. Those losses have been cut into, so we'll see how that goes. What I've got now is most of the, across the equity index is down about 0.4. Oil down 0.7. Copper up 2%. Precious metals mostly flat. And on the macro front this morning, we've got personal income at 8:30. Then we've got PMI and ISM manufacturing and construction spending at 10 o'clock. And also we have at 10 o'clock the University of Michigan consumer sentiment. And that's going to be a very interesting and closely watched number as inflation fears, energy prices, all that stuff gets rolled up into consumer sentiment, and we'll see how that plays out. You might want to take out a pencil and make a few notes here before I dive into the charts. First of all, I received a very nice thank you note from one of the traders. He is in the room, but doesn't participate regularly, just kind of a watching and seeing what's going on kind of guy. Sent me a note saying how much the levels and the technical analysis have helped him over the past many weeks or months. So I really appreciated hearing that. And by all means, certainly I always like to get nice feedback, whether it's on the videos or the notes on the blog or whatever. Please let me know when I'm helping, and also what I can do to make the channel and the community stronger and better. There's got to be things out there you want to see, whether it's sectors reviewed, individual names, going live for chats. I've considered that. Give me a little feedback so we can keep on improving. I'd really appreciate that. I think there were some very important things yesterday that went off for me. Number one, I don't know if you saw it or not, but Bloomberg reporting that China has put out the directive to its utility and major companies: buy commodities, buy energy at any price, right? Don't run out. Whether that be coal, natural gas, oil, copper, just don't run out. We can't afford to have industries shut down or the lights go out or whatever happens when you run out. We don't want that to happen. So we don't want to hear that, it was too expensive, so we didn't buy it. Now we don't have any. So I think that was a light bulb moment for me. Also in Europe, we've been talking about natural gas prices and the power crunch over there. And I heard that what they're paying for natural gas right now in energy equivalents is $200 a barrel in oil. So for the same amount of energy, if they were to combust oil instead of natural gas, it would be at $200 a barrel for the equivalent energy producing thing. So there are, where possible, for these utility companies, they're either, if they have the ability to do coal-fired, they're switching input fuels to either coal or oil if they have that ability, because it's cheaper per thermal unit. And then, of course, since Europe is farther along in their whole ESG, war on carbon, they've got to buy carbon offsets to account for the dirtier fuel, which is oil and coal versus natural gas. So a lot of those guys over there are really in a box. So I think one of the themes that's emerging for me into Q4 is basically short Ponzi and go long hard assets. Ponzi is all the things that worked in the shutdown. Zoom, DocuSign, Roku. I mean, all these names, the ARC names, ARC Genomics, all this kind of stuff that doesn't really have any earnings support. I think that's going to be really, really tough. But I also think there's going to be a bid. There's going to be a bid in energy. I think there's going to be a bid in domestic cyclicals. And I want to start watching gold real close. It was up $30 yesterday, which is the first sign of life that we've seen in quite a while. I'm going to go over the gold chart with you. So anyways, I think those bubble names are going to have a hard time in Q4. So we'll see how it pans out. I'm not the kind of guy that, comes up with some kind of a verbal thesis and just sticks with it. I want to see levels break or levels hold and get recaptured, as we've been talking about. And along those lines, remember that thing we said, nothing good happens under the 50, right? Nothing good happens under the 50 EMA. That once we lost that we were on the kind of the wrong side of the chart, and to pay close attention to stops, pay close attention to whether you were going to be a person to buy protection or go outright short. That 50 is often the demarcation line for good things and bad things happening. And now we're coming up on the 200. That would, of course, be another one to focus on. And today, a couple things. We haven't seen the panic sell-off yet. This morning, the VIX was hovering around 24. And yesterday, yes, we sold, but there was no panic. It was just kind of like grind down, poor close, but no panic. What to watch for is some kind of a panic move into a key support location, and then they quickly recover that for that, that classic V bottom. I think that's going to be something to look for. And also, if there is a panic today, but there's no V bottom, it'll probably follow through till Monday. There's that saying, bad selling never ends on a Friday. So then we may see follow-up selling Monday and then have turnaround Tuesday, or have a bad open Monday morning and then the buyers step in. So just keeping those things in perspective as we start this Friday and first day of the Q4. All right, U.S. dollar, really nothing happened yesterday. If you're new to the channel, welcome. And if you are interested, jump over in the show notes. There's a link there where you can that'll take you to the blog site where you can drop in your email address and register for all my content. And here's a little extra information about the registration process to get you all set up, and then you'll not only get an invite to the trading room, but you'll also get any content I publish sent right to your email box. You won't have to look for it. We were talking about EEM. there was an interesting trade yesterday. One trader bought the October 8th 49 puts 2,500 times. That was a trade that stuck out to me. So looking a week out, we had talked about a rising dollar being a headwind for EEM. So we were up a little bit yesterday, 0.8 on EEM, but that trade went off in the early afternoon. So I just wanted to throw that out there. At least one guy was looking for a breakdown in EEM. We backed off a little bit on 10-year yields. Nothing to, scream about. We'll probably see some consolidation in this new range. And if we were to see another big spike, remember that's what we were talking about, where TLT would nosedive on a rate spike. But I don't really see that happen. I think there's going to be a little bit of consolidation first. But just remember, rising rates are a headwind to tech and those bubble names. So keep that in mind. And, here's a little reminder of it right here as well. So, talked about the VIX. We're hovering right around 24 in the pre-market. One signal of that panic sell-off, if we do in fact see that, is, get a VIX spike up into 2750, 30, or even higher. In the past, you can look back. It doesn't stay there for long, maybe a day. And if you are nimble and you get that extreme put or extreme spike in VIX, you can buy puts on that, looking out a couple of weeks. That's usually been a good trade. If you, look back here, you usually get, when it bounces, the VIX will come off really, really fast. So that's something to look for. Nothing happening on the oscillators. We're not even near oversold. So these aren't really going to be helpful right now. And, if we do, in fact, get 1 or 2 days of hard selling, then we would drive down to this minus 60, minus 90 level where we can shoot the other way on a long as these get overextended to the downside. But right now, we're absolutely in the middle with nothing predictive in these charts at all. Equal weight SPY, you can see the big red bar. On equal weight, we're not even down to the low yet of the Evergrande last Monday spike. So we got a ways to go on the downside. 148 and then 146 at the bottom of this box here. Going on to cap weighted SPY, you can see that we made a perfect double bottom here at 428. Perfect tag. Now today, before I get into that, let's look at the downside targets. On a break of 428, the next line comes in at this prior low at 422.50. And then if that fails, you're basically headed to the 200 down here between 412.50 and 410. And what I want you to do, because it's been so long, is orient your mind and be open to that possibility, right? Keep your mind open to more downside. There was actually a comment on one of the videos the other day by a trader that's saying just about the time I thought I got it figured out, they go the other way. Well, and what I said to that person was, always assume you don't have it figured out, because as soon as you lock into a narrative, in my experience, when I do that, I usually lose. So the idea is to be open for a vicious sell-off and a V-shaped bounce, or a nosedive to the 200, which is way down here. And if you can keep your mind open to that and not try to outthink the market, because you never will. We can use our tools and our levels. Those are objective. That's objective information. If you lose 428, you got to be thinking 422, right? So let's just move on to the 2 hour. We'll see it. So here we are at the double bottom low, right? So in the pre-market, we know we're below. If this morning on the open, we come up and recapture that low, then you can be long against it, right? We opened, we're down here in the pre-market, and we open up, and then they buy it immediately and take it higher, recapturing this level from below is bullish. By the same token, if we gap down, that's bearish, and we've got support levels at 425 and 420, and this is the 420 is the 420 is here. We got 412 way down below. That's the 200. So we've got a couple of intermediate levels here that can act as support. But what I'm saying is, don't get in your mind enough is enough, right, as far as selling goes, because they can just keep going. What you want to see is price move into some support level and then get recaptured, and that would be a very good signal to get back on the long side for that bounce. But my point in that whole discussion is, don't try to guess when the reversal is going to come. Wait to see evidence of it, because if you're guessing, there's a 50% chance that you're going to guess wrong, and we want to be more evidence-based than that. Moving on to the Qs, we've got two very distinct levels, or actually three on the daily. You can see that this 360 has been a very important point in the chart. Why? We came down. Well, first of all, this was the Evergrande low. Perfect tag of 360. They ramp it up. Gap down. Basically stops right at 360. Wednesday, tried to get above. Couldn't do it. Closed a little bit below. Yesterday, tried to get above. Poor close. Closed below. So recapturing 360 is going to be a very, very important level on the Qs as far as like a turnaround. On the downside, you've got two levels. You've got 352.5, which corresponds to this first, you can see it here, the support shelf. Here's the big level. Now that we're below, we're falling, support is falling away, giving this the opportunity to come down to 352.50. And you can see that below 352.50 is a volume over price void right here, where there was not a lot of trading. And so if that level were to fail, then you've got really a nosedive down to 342.5, and probably even, a brief overshoot to tag the 200, which will be coming up, higher and higher as the days go on. So you could come down here to 352, get a little bounce, then come back down, whatever the path may be. All I'm saying is there's the potential in the days ahead, weeks ahead, for the 200 to continue rising into this 342.5 support level, to where they would both be very close by the time price got there. 2-hour chart is just more granular on what we were just talking about. We got, I think, in the pre-market, if I'm not mistaken, we were trading around 357. So, and we've got this important level here, 360, which would be a level to recapture. And then we've got a variety of potential little micro support levels coming down until we get down to 350, and then the level below that, 342.50 for the next major support level. On this view, the 30-minute really isn't going to give us too much. Got to wait for that to reset. Moving on to the IWM 2-hour. This key level at 222 did not hold. There was a gap here. We sliced through that gap. We sliced through 211, which was a support level. And now we're trading down. I think we're actually trading down around 217 when I was looking this morning. So there's going to be a gap here on the open if that holds. 217 is a support layer. And then you've got the Evergrande low, which was right here last week, down at 214. So that would be a place for, getting a double bottom low. And then if we lose that, then we're back in the weeds at the bottom of the real big box on the daily chart, down here at 211 and 209 from the past. So there's some very distinct levels there on IWM. And here's just a little more granularity on that. You see the gap here. We'll have to figure out once we open this morning. If we open weak, then there'll be a gap above that needs to be filled, etc. But I think, like on any chart, once you open down, you can come back to fill that gap real quick, and then you run into these overhead resistance levels where there's the potential to roll back over again. So here's some really good lines to shoot against if you want to get involved with IWM today. Facebook just remained in a very tight trading range yesterday between 342 and 339. So, that to me looks like, just a consolidation waiting for a breakdown to happen. It doesn't have to be that. It can certainly, you could view this as building a base and then we break out. So, you can trade that as you like. I think, I want to look at the daily chart to just refresh your memory of this. We've got a little support layer here at 336. You break down out of yesterday's range there on the hourly chart. I would bet almost anything you come down quickly to this 325 where you see the 200 coming in and that would be, if you wanted to try a duration trade on Facebook, take the regular market conditions into account. If everything's falling apart all around it, and Facebook tags the 200, you don't have to buy it just that second, but it should be a location in your mind where the bulls should step in and at least stabilize price. But if they don't, and it slices right through the 200, then, we probably got all kinds of hurt going on. So just be aware of that. But very, critical / nice trade location right here at 325, where you've got a large volume over price bar and the 200 coming in. I think that would be a pretty sharp place to refocus attention to the long side. Very much the same kind of thing with Apple. You can see that we've now super validated this 140, 150. This was the Evergrande low, bounce, basically came back to the same location again, bounced, closed right on it again. If we were to break that level today and there be some kind of a panic move, I want to refresh your memory on the setup on the daily, and that is a breakdown from a support, on the hourly chart. You get this move down to 136. I would view that as hyper support. You got resistance, breakout, and now you could view this whole thing as a back test, but you've got the uptrend coming in, you've got lateral support coming in, and you've got the 200, the rising 200 as your fail safe, right? So if we get some kind of a panic move into 136 and there's a momentum overshoot that goes right through it, you got the 200 there as a fail safe, and then what you'd likely see is a kind of like a recovery there, like a bad candle, and then the very next one recapture it. That would be another sign that that's going to hold. But I will say this: if a location like this can't hold, when you got triple support, lateral uptrend and 200, and we're down here at 130 at some point next week or 2 weeks from now, very, very, very bearish sign that price couldn't hold that kind of support. That would not be good. Tesla's doing pretty well, actually. The reason I say that is, high in the chart, up and to the right. We're inside this consolidation flag from 790 to 770. As long as it stays in, above 770, the bulls are definitely in control. What you got to be careful of, if you're a Tesla trader or you're in the position, is number one, the first sign of trouble will be losing 770, and then an even bigger sign of trouble is if you came back into this trading range below 760. That would be very bearish, because then your target immediately becomes 740 with the potential of even coming down here to 720. So be careful on the downside if things start falling apart. But as it stands now, as long as price is in this flag, then I would say the chart is bullish. Microsoft started to break down from this, what we thought was a flat bear flag. Here's your impulsive move, comes down here, breaks below the flag, 282. I went over on the daily chart and identified 274 as key support. We can look at that right here. And that's the bottom of this rising channel right here. And then you may also want to make note that the 200 comes in at 260. So that would be one of those situations again where you would think that if the bull market is still intact, that this 274 would hold with lateral support and the bottom of the channel, and then your last stop at the station, as it were, would be at the 200 down at 260 if that were to fail. Amazon sitting on the 200, so you really want to see that hold. If not, then quite a bit of downside opens up to 32.50. Then you got a little gap down here at 32.10. So, yeah. So there's some pressure there right at the 200. You would hope that that would hold. Google inside that $50 gap, and unless this can get recovered here at 26.85, my expectation would be that this gap would fill, and if there's more selling, you got a gap right below it. So still, we're still relatively close to the 50 here at 27.50. So we can look at it. Let's look at it real quick to see where the 200 comes in. I would assume it's way down here. So here are the gaps. The thing about it is, and this is how I use these volume over price profile. Look, we are right at a large volume over price support bar. You get underneath this, right in here, you got a big void in the chart. So price could move really, really fast down to 2,500, and then your 200 becomes more realistic, but not looking too far ahead. But even if you're trading the hourly chart, toggle back to the daily where you can see some of the, zoom out, get a bigger picture of what's going on the daily chart. Netflix looks good as well. Came up here, gapped up yesterday, up into this 613 area where it had trouble, and then had it backed off at the close. But now you've got this gap here from about 607.50 back about a $10 gap, back down to 597.50. So if you're if you get a breakdown into this gap, I would assume that would fill. But as long as it holds, I think the bulls are in good shape. I mean, that's pretty amazing relative strength there in Netflix. It looks really good. Semiconductors held the line. Held this key support area at 256, and what I've done here is gone back to the daily chart and given you some intermediate support levels. 254, 251, and 248 are your downside targets. And really what this looks like is a big move down with a consolidation. The trigger would be a break of this 256, and then that looks like, more or less a bear flag breakdown. So it's gotta pull itself together here quickly. I wanted to show gold. We had back here in the chart, we had a double bottom back here, and that led to a pretty nice rally. I missed it, but we just had a double bottom here as well, and we had a $30 move yesterday. You may want to set yourself an alarm here at 165 on gold on GLD, because if inflation fears ramp up, you may see a breakaway for gold. Now, it's got a lot of work to do overhead to get back up to these prior highs, but all I'm saying is, if you couldn't get it here, the next best place is on a break back above 165. Why? Support, 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 and now it's resistance. So a break back above 165 would give you a really nice line to shoot against. So I like that. And if you want more beta, I don't have the chart handy, but you can always look at the miners. But the thing is, if you're in a big sell-off, miners are stocks too, right? It's just another company. And if there's a big sell-off, sometimes the miners go with it, and you're better off sticking with the metal that can outperform when there's a big sell-off going underway. So let's wrap it up there. Stay on your toes today. Friday, Lotto Friday. Keep your head about you. Focus on the levels. Bad selling doesn't usually end on a Friday, carries over to Monday. So let's see how it goes today. Let's see if we can stop the selling and kind of stabilize the market, and see how we head into the weekend. I will definitely try to reach out to you today on like a midday observation, maybe even in the early afternoon, depending on how it goes. So this has been Chris Buss with Traders Private Compass. Talk to you next time.